Hello, and welcome to NYSE Investment. This analysis is for Intercontinental Exchange on the New York Stock Exchange as of 16th of July 2026 with a share price of $141. The full report is on donatsayan.ca. This Intercontinental Exchange is a wide moat, capital-light compounder, the toll booth on global markets, but after a 25% pullback, it trades at roughly fair value, and the tape sits below its key averages with no confirmed entry. Every horizon reads, hold, a quality name at a fair, not attractive, price. Watch for a better entry rather than chase it here. Intercontinental Exchange owns 13 exchanges and 6 clearinghouses across energy, agriculture, metals and financial futures, plus the New York Stock Exchange and a large fixed-income data business. It earns fees on activity and data rather than taking market risk itself. The economics are excellent, operating margins around 41%, free cash flow near $4.5 billion and roughly half of revenue recurring. The moat rests on network effects and switching costs, liquidity and clearing pools concentrate on one venue, and embedded data feeds are hard to unplug. Quality scores 82, a top-tier capital-light compounder. On valuation, the quality is roughly priced in. The adjusted price-to-earnings multiple is about 19 times against a warranted multiple of 19.5, a ratio of 0.97, which lands squarely in the fair band. The forward multiple of 17.6 is a shade cheaper. Free cash flow yield near 5.7% is attractive for a compounder, but the price-earnings to growth ratio of about 3 says you are paying for durability, not growth. Analysts see a median target of $184.5, some 30% above spot. A fair band name is not a valuation entry until it gets cheaper. Two things hold the signal. First, the tape. The shares have derated about 25% from a $189 high, and while the monthly structure is intact, the weekly and daily trends are downtrends below both the 50-day, near 142, and the 200-day, near 156. No technical entry group is met. Second, the mortgage technology segment, higher for longer rates, suppress U.S. home loan originations, and June pending home sales fell 5.4%, so that engine is a drag. The exchange and data engine outweighs it, but it caps the driver and holds every horizon. Now the other side of the ledger, higher for longer deepens the mortgage origination slump, exchange volumes normalize lower, buybacks paused, 3 times leverage from Black Knight limits support if it drops. Now weigh the risk against the reward. The bull case is roughly 31% above today, the base case, the most likely, about 11%, and the bear case, a fall of about 17%, so you are risking about 17 to make 31. So, our call on Intercontinental Exchange, on the New York Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donatsayan Investment at donatsayan.ca. The link to the full report is in the notes below. Have a great day.